All right, and we are live. Roy, how's it going? Happy Friday.
Happy Friday. Maybe not happy Friday in the market, but yeah, I'm doing well. How are you, Tavis?
Doing well. Happy to be here. I have been looking forward to cracking open this monster literally all day long today. So I'm gonna do that now. It's
Oh man,
I'm only having them during my live stream. So I had one yesterday and I had one on Monday, and then I'm having one today.
oh man, I should do that. As like a extra incentive or something. No,
Yeah.
yeah, this is good, but it's no white monster, man.
Just
Um,
conditioning myself. You can have an energy drink if you go live,
yeah.
so that I will enjoy going live more often.
Although live is fun, and we're here. Of course, this is Fiesta Friday, guys. We this was a little bit more free spirited, so we might do something fun at the end as well. Not that the Q&A isn't fun, but about half the show is going to be Q&A period, and so ask those questions. Can be related to the market. Most of them I know that will be, and we're happy to answer some that are a little bit further out of that range as well. But Tevis, we need to talk about the market. So, the title of both of ours is very similar. Whether the bottom is in or there's more pain ahead. So, of course, we are just beginning to ramp up an earnings season. What
Yep.
do you think, Tevis? Why is the market acting like this? Because we had two pretty good inflation reads, and initially the market was quite excited about that, and now we're feeling a lot of pain, especially in the tech trades. So, what is it that you're seeing that's going on, and we'll talk, I think, first there before predictions and predictions.
I think it's a much needed pullback. The market, maybe as a result of geopolitics and the uncertainty there, is deciding to profit take a little bit, take some off the table, especially in high beta names. Of course, we have earnings coming up, and so that's a factor as well. Lots of names have run in this quarter over the past several months, and earnings can have serious implications on stocks. I mean, they can go up 20% or down 20% on the earnings. I mean, in the case of CoreWeave, up 50%, or in the case of Air Test Systems, up 50% in the case of earnings.
Yeah.
So, I think it's just the market going into some more defensive stuff. If you look at this week, we had high beta names selling off and AI names selling off, but you also had the other like consumer staples and just the Walmarts of the world being fairly flat. And even healthcare was going up a little bit, and other sector rotations were happening. So I don't really see too much structurally wrong. It's just profit taking and a much needed breather. I think we went back into the fear territory on fear and greed. And ultimately, I think it's going to prove to be a next leg higher. Obviously, after we get through earnings, that's going to be the big gate. But once we get through earnings, I think we're going to go higher because the demand is still fundamentally there. And a lot of these companies, like the bull case, is very much intact.
Right. Yeah, it's. I think there's multiple reasons, like you said. We seem to hit this like at the beginning of every single earnings season, and it's usually a question around AI and the durability of the cycle, how long it's going to last, what capex is going to look like, what's the ROI. Some of the conversation has certainly shifted, and certainly there are some names that ran like ridiculously. Not saying unfairly, but they ran a lot. And you'll, even if it's extremely validated by the market and by what's happening, people are going to take profit along the way. Traders enter, and they'll want out at a certain point. They set stop losses. One of the, or I guess there's like two other things that I see going on. We'll talk about what we expect from here. This is one of them. So this is the Korean stock index here, and I'm sure that there's better charts, but I just wanted to pull it up massively. Like, can you imagine if the S&P or the Nasdaq was up 58% in a year? That's awesome. Well, it was up a lot more earlier. It was up at one point 110%. The way that Korea is structured is some of the largest companies are AI and tech companies, and of course, they did quite well. Hynix being one of those. Now, if we look at this week, this is a pretty dismal week, and over the last month, this is also a pretty dismal month. I saw a lot of indicators of margin calls happening in the Korean markets. Korean traders and investors love tech stocks and they love margin even more so than here in the United States. And so that's what that's doing is it's causing a few things. But one of those is there's a weight that's on tech specifically in the market, which is a large part of the market. And the more this occurs, and hopefully we don't see too much lower because I think there's probably still some more leverage to squeeze out. Be careful, as always, with margin, guys. Not telling Tevis what to do, but yeah, just be a little bit careful. But yeah, regardless, this is causing a lot of pain, a lot of waves. The other is this right here with inflation. So I want to talk inflation just a bit, but is this, before we do, is this any concern for you, Tevis, as far as what's happening in the Korean market? Like how seriously? Okay, why not?
It was like 1 in 30 Korean adults are getting margin called. Korea is such an interesting use case. I was seeing this thing in Korea where like luxury goods do very well there as a market because psychologically a lot of people are just priced out of big purchases and they gravitate towards, you know, luxury handbags and watches and stuff because that's what is like attainable, that they feel they can still achieve a certain level of luxury while ignoring the structural problems in their lives, i.e., homes. Dude, that market is just it's a very unique subset, and I think the psychology for North America has historically been just squirrel away a portion of your paycheck every 2 weeks into a low cost index fund and do that and save for retirement. I think a lot of Koreans, they are,
More
uh
aggressive?
yeah, like they are like
A little
in
bit.
a rush. They're not looking to save up for the next 40 years. They're looking to either, make it big or die trying. And look, the numbers speak for themselves, right? Like the Korean stock exchange is like degen central. And it's cute that you guys think I'm Korean. I mean, look, if you guys didn't know what I look like, and if you'd never seen me on a live stream and all you could go off of are my trades, you would probably think I'm Korean, but I'm not. But so my point is, Roy, is like, yes, Korea and the margin call central that we're getting over there uh, can definitely drag down other markets, but I don't think it's emblematic of like just because something is happening in Korea, like the US markets are also gonna do the same thing psychologically. I think it's
Yeah.
just different type of mentality altogether.
Yeah, well, and the reality is like the Korean market deserves to be up. I don't know like what percentage. It's not going to go to zero. There might be more pain ahead. I think especially if we see more lower levels. Like they're very heavy in like energy trade. They love Palantir, by the way. South Koreans tend to. But yeah, like tech in general. I could almost be a Korean in that
Well,
regard, just without the margin. But let me ask you on the margin thing. I saw that post,
mhm.
and I didn't know if it was 1 in 20 Koreans that are invested in the market, which like that's I think half of Koreans are, or maybe more than half. So it'd still be 1 in 40, or is that 1 in 20 of like all Koreans?
Yeah, I think it was like 1 in 30 of all Koreans is
My
like
goodness,
facing a margin call. It's insane, dude.
that
It's absolutely staggering.
I just yeah. I mean
It's like
yeah, that's
3% of the country is facing a margin call.
I have two thoughts there. One is that's really scary, and it's also scary for the country. Like if things really do pull back hard, and at some point they will. I don't know that we're at that, and we'll talk about why in a moment. The other is Robinhood should get there ASAP. Like ASAP, go there. You guys like
Yeah.
margin? We offer it cheaper than anybody. You like prediction markets? Here we go. You like tokenization and all these different tools in 24. Let's do that. Options, all right. Let's do that too. So Robinhood would go to like 200 overnight. So
Okay, let me like I know it's all fun and games and jokes, but let me explain to you the dark side of margin because a lot of people unfortunately uh make emotional decisions and I don't know if you saw this, Roy, but this should scare the crap out of you because it did me. A Korean YouTuber this week was reportedly stabbed by one of his subscribers because they lost money following his stock picks. And I shouldn't laugh. That's absolutely horrifying. But this is like what you get when a lot of people are levered up with all of the money that they have and then some. Um, Very scary. And I think this is an appropriate time to tell you guys that nothing that we offer is financial advice. So please don't sue us, or in this guy's case, stab us, please.
Yeah.
We are just sharing our own opinions. But yeah,
It-
it's very scary when margin can turn against you because, I mean, look, if you're just holding a stock with your own money and it goes down, then you can just wait it out. But if you're holding on margin or on options or leverage or anything like this, like there is a time aspect. So you can get hurt in a big, big way. Not financial advice, guys. Go ahead.
So on the Korean front and the tech pullback and everything, this, and I did see someone mention in the comments. Well, regardless, oh yeah, Zom. So yeah, you're absolutely right that they did raise rates. They don't do that very often, and the reason why is, of course, when you have so many people that are invested, and you have some people taking money out of the market as well. There's a lot of money in that market, and so it's causing some inflation pains, and so they tend to not hike very often. This, of course, just like it did back for us in 2022 and 2023, when those initial hikes started coming faster and higher than many people were expecting, it just caused a lot of pain in the market. Now, the difference is, I don't think that they're going to hike multiple times. Like, you can look at not just this headline, but historically how often they hike, what they usually do, how often it is between hikes as well. I would be shocked if we get another rate hike by the end of the year for Korea. Probably not. I mean, we might not see even another one, period. And so, like, it just takes a little bit of time for the market to digest it. That's kind of what's going on this week. And I think, Monday, Tuesday doesn't mean that the KOSPI is going to stabilize, but this isn't going to be weighing on the market anymore. So, just be a little cognizant of that. The other thing that is the big driver, and you touched on it a little bit too, in my mind, is this right here with, of course, inflation. We talk about it quite a bit, and rate cuts. So current rate is still 350. We got another Fed meeting coming up in 2 weeks, and we can see, but through the end of the year, right now, there's been some movement, actually a lot of movement. A day ago, we were looking at 26% of it just staying flat, and then today is 19, like it was a month ago. Was down to 14% a week ago as well. And we, of course, had two good inflation reads this week, which is one of the reasons why it's been this volatile. But it's back up, and a lot of it has to do with the same reason that the TTF and most energy things are up as well, is because of things that are happening in the Strait of Hormuz, with Iran not being really settled. We'll have to see how that actually works, but this is a driving force of inflation. Although if things actually do finally, at some point in the future, in the next 50 years, actually get resolved, that would be amazing. Preferably sooner.
Yeah. We'll see what happens. Of course, we got the Fed in very shortly here, or was it? Did it happen this week? Sorry, remind me. It was this week, right?
The Fed
On
meeting?
Wednesday, the Fed minute. Yeah,
Minutes came out.
not
I
the
think it
minute,
was this week.
the actual FOMC meeting.
No. That was
When is it?
2 weeks ago. So the next one is in 11 days, 19 hours, 45 minutes, and 17 seconds. Yeah, no, it's not for my memory, guys.
we have it. We have it coming up, and obviously that's going to be something that the market's going to be looking towards. Of course, we did have CPI just print its lowest number since the pandemic, coming in at 3.5, down from 4.2. So a little bit of good news, although the market didn't really, take it as well as probably we thought it would. So, I mean, that to me signaled that there was just a rotation in full effect, and nothing, more to say about that.
Yeah. So, I mean, like, I think if we had seen Hormuz, like the ceasefire stick and be concrete and not be moving around and changing so much, we would have seen a lot stronger reaction. But I think that's weighing over the market. The other thing, so as far as predictions, if this is the bottom or if there's more pain ahead, looking at RSI, looking at a couple of the factors that are driving this, it could be a couple more weeks of not straight down. We can't do that, but of chop, maybe even to the downside. What I think is going to change things is between the Korean markets, stabilizing just because the rate hike has been digested. FOMC meeting is coming out in 12 days. And I forgot to look. Let me see what the odds are. I won't even pull it up. 85% are saying that we're just standing pat. But I think the biggest thing is it's going to kind of set the tone for the rest of the year. There's no way that they were hiking in July. But September, October, and December, 3 meetings beyond that. I think we'll have a much better idea, Tevis, than right now as far as what they're thinking. I still lean towards maybe there's a hike, like if Hormuz continues to be unresolved, but likely they're going to wait because they're trying to get better measures in there. They're not trying to overreact. And of course, we had 2 really good inflation reads as well. So I think that the other thing is earnings have been really good so far. Mm-hmm. The market has, for the most part, ignored those completely, and they're like, "Oh man, TSMC, great earnings, that's awesome. Well, we're going to sell you off. ASML, okay, awesome earnings, really good. We're going to sell you off." Air did get a bump, of course, that melted down on Wednesday and Thursday as well. But I think that we're going to continue to see a lot of beats across the board, a lot of strong measures, like especially from the banks, and financials will be very important. I think it's next week when we get those. Usually on Wednesday or Thursday, but double check me on that. So I think those will contribute to a point where we're going to see some stabilization here within the next few weeks. Could be wrong. This isn't, I believe, the start of a bear market or anything like that, guys.
Yeah, I mean, JPM posted like record numbers, and that should be good for a company like Sophie, which is coming up very soon. ServiceNow reports on Wednesday. Looking forward to that one. Of course, Air Test Systems knocked it out of the park. Honestly, man, I kind of hate myself because last pod I was talking to you, and I think I said this live. I was like, I had covered calls on Air that were up like 30% from I think I wrote them on Tuesday, and this was like Wednesday or something like that. And I was like, I should sell these because Air is going to report earnings, and I didn't. And then Air went up like 50%. I was like, damn it, I could have wrote on them again because Air is back down now. It gave up like all of those gains.
Yeah. Yeah, it's kind of a sector thing right now in the whole market rotation. So what are your thoughts as far as, are we bottoming soon? Where do we bottom? Is there more pain? And what are you doing about it?
I already did what I'm going to, I wrote a whole bunch of cash secured puts, and I was very public about that. I even said, in no uncertain terms, Ronald, I said, I am declaring war on Nebius Bears. I wrote at the money cash secured puts for December for Nebius, and I got paid very handsomely for those. So, I mean, we'll see. And then like the day before that, I wrote cash secured puts on CoreWeave for $70. And I think the day before that, I wrote some more stuff as well. So I wrote more cash secured puts on Nebius for September. So yeah, that's what I did this week. A lot of cash secured puts. I don't know what more to tell you.
Yeah, and I'm sadly out of funds for the most part. I have to sell something, and you can only sell your kidney so many times, guys. You need one of them. So, but all jokes aside, like I've made my moves already at higher levels for the most part than here. But I'm a long-term investor, and so thankfully I'm not just making moves and I'm like, hey, I need this money in 2 weeks. That's, at least for me, no way to live. So are we? I don't know that you answered the question. Like, where do you expect us to go from here? Say it again. You're muted.
I expect us to go higher. Okay. I think we're going to chop into earnings season. I think that's like all bets are off. But I think once we're through earnings season, we go higher.
Yeah.
Yeah. We are in a bull market, Steve says. And like, look, like I said before, nothing has structurally changed about the bull market. You are still in this growth trend. It is just climbing the wall of worry, man. And I think, I saw this in my portfolio. Like it's not a straight line up, and it's like a jagged thing, but the direction is still up on a multi-month view. And people who are saying like, oh well, you guys are making profits. I think there was a comment like that, like you guys are making money. It's like, yeah, dude, like if you bought Nebius when we were talking about Nebius, it was $80. It went all the way up to 300 at the top on like June 18th, June 19th, and now it's back to 200. If you do the math, you're still making money. Like now if you bought it at 300 and it's at 200, yeah, sure, you're down quite a bit, but like 2 months ago, this thing was half of what it currently is. Yes, it was 3 times what it currently is 2 weeks ago, but it's still double, right? So I just think that like people have a very short lens on their trades, and that just to me is not a good sign, which is why we started this show with a big not financial advice sticker because it's like live by the sword, die by the sword, right? These people, they want the aggressive gains. They want to buy Micron at 300 and next week it's at 1200, but they don't want to ride it all the way down when it's at 1200. And guess what? Today it's like at 800, right? So
Right.
you have to sort of zoom out a little bit.
Yeah. No, I agree with that take, and it's we can't predict like the day or the amount necessarily. There could be some more drawdown, but I would be surprised if we emerge to the other side of this earnings season and we're not higher, that we haven't stabilized at some point. The only thing that I could really see, like there's always can be surprises, but is just Hormuz getting way worse. Trump has boots in the ground. We talked about it in the past, so I don't think it seems like it's that realistic, but yeah. All right. So a couple more things maybe before we have Q&A. A couple of interesting tweets here. So I should mention, I forgot to send the link to you. My apologies. My apologies. But we're going to do Data Center Monthly live on Tuesday. So we'll still have Bootleg on Monday. Nate is going to, of course, be with me. He's my co-host for that show. And our special guest this month is going to be the one and only Tevis. A lot of reasons for that, but a big one is Nebius has had a ton, and I mean a ton of news. And of course, there's a lot of other broader macro news as well related to the data centers. It's kind of the epicenter of this storm right now. But there are, so some of the stuff I think that we'll save maybe, for your own videos and for next week. But I did want to talk about two specifically. So I don't know if you saw this from Truth Social, with Donald Trump, but I thought it was really interesting. So we've seen this week. Oh, I'm blanking on her name. Cunningham. Sophie Cunningham?
Sophie. Yeah, Sophie.
Yeah. So I'm sure most of you guys know who she is. WNBA star, like very, very physical.
I responded to her post. I was just like, look,
I did too.
Play basketball and stop having opinions on data centers, right? Stop fucking up my portfolio, Sophie.
Let me find that. Like, it kind of shows you where we're at with data centers when you have basketball players. You have it?
I got it. I'll throw it up.
Okay, yeah. Throw it up there. And then we'll pull up mine.
Yeah. I responded to her. I said, look, as someone invested in Nebius and CoreWeave, don't you even dare, Sophie. Because she posted, how do we save our farmland and stop all these dumb data centers? It's like, lady, what do you think you're using to tweet right now? Like, what is powering that? XAI data centers. So I don't know, man. I just like people want AI and they're like, oh yeah, ChatGPT is my therapist and Claude is my best friend and this. And then they're like, how do we save our farmland? It's like, Sophie, the farmland was at risk 10 years ago before we had AI. Where were you? I don't know.
Yeah.
So
can you throw up X-Joppies? Have you guys seen that? Yeah, the golf course one. Yeah,
this one?
Exactly. Banned grass lawns and dry states. Before that, banned golf courses, bro. I think maybe 4 or 5 months ago, a lot of people that are pro data center were like, hey, look at the elements. There are a lot of things that use a lot of water here in the United States, but a lot of the modern data centers are the they recycle their own water, and so there's always some loss just because you're not 100% perfect efficient, but they have that closed loop ecosystem. So
Like,
the
look
older data centers do use a lot more actually, but yeah, exactly.
look at this. U.S. data center versus almond growing annual water use. All right. This is my response to Sophie Cunningham. 1.6 trillion gallons is the estimated total water applied for growing almonds versus 17 billion data centers for all AI use, all the connected capacity. Like, there's zero proportionality here. It's just whatever is highlighted in the media to villainize innovation. It's just it's kind of crazy to me. But people just don't want to do the homework, man. They just recycle the headlines and regurgitate it and become like little virtue signaling, freedom fighters for these causes that they don't even know what they're arguing.
Yeah, and I'm for the first part, save the farmland, But yeah, to be fair, like 1.6 is a lot smaller than 17 if you remove the words after it. So it can be hard to understand. But like there are like legitimately some of the older data centers use a fair bit of water. It's not a small amount, but the ones that are being built that everybody's concerned with, power is a concern, guys. Not water, not really. Outside of maybe a few instances. So Donald Trump, I think maybe because of some of the popularism of what's happening with the anti-data center movement, and we of course saw the moratorium 1 year in New York for new data centers, not existing ones. He said one of the biggest driving forces in the future for jobs are data centers. They're big, strong, bold, and money machines for the state which they're built. I actually kind of disagree with this a little bit. So construction and everything, yeah, there's jobs that are brought in, but there's really not that many jobs that are necessary to maintain them. So it's a little bit different than just traditional businesses. But regardless, he goes through and he talks about what happened in New York. He's terminated the data centers. These companies are now being sought in Alabama, Florida, Texas, Arizona, and many other states. And actually, a lot of these places where they're building, they're starting to look at more rural locations because there's pushback in some of the major urban ones. But both the taxes and the jobs amount to liquid gold. Like in Texas right now, they have an incentive that basically doubles a company's tax credits if they build in a more rural location outside of the Texas Triangle. But yeah, it's clear that there's pressure on both sides. And I've actually been a little bit surprised, to be honest, this election season, which maybe it's because I try to ignore all this stuff right now for the most part. But this hasn't been more of an issue. But as we come to November, it wouldn't surprise me if there's a little bit more. And then the other piece that I thought was really interesting was this with Meta. Now, before we talk about the Meta stuff, with Sophie Cunningham weighing in there, President Trump pushing back, New York doing a 1 year moratorium, are you reconsidering saying, hey, maybe we're wrong about Nebius, maybe we're wrong about inference demands, and maybe we're wrong about CoreWeave?
Oh man, come on! Like that is such a you're trying to trigger me at this point, man. It's just like, hey, all of these factories produce a lot of pollution to the environment. Maybe we're wrong about this industrial revolution thing. Let's just go back to farming. Like, look, this is the flip side of innovation, right? You want to be competitive and you want to be innovative and you want to be actually living in a society that progresses forward technologically. Yeah, you're gonna have that. Just be well informed.
Yeah.
Yeah. New York. Did you see this? The New York data center block, dude. I'm going to get triggered in this pod. And this is not what I signed up for. This is Fiesta Friday. Okay. This is not fucking Tevis triggered Friday, dude. New York having a moratorium on data centers. God, like, they deserve everything that they get as a result of this policy. It's just stupid. This is like, it reminded me, Roy, of when Amazon wanted to build headquarters there, and it was like thousands and thousands of jobs, and they're like, nah, we don't want it. And then they moved to another state.
And that was even crazier to me because those are durable, lasting jobs, not like a lot of the data center jobs, to be honest. So the other that really caught my eye, and there's a whole lot of data center news. I'm going to do a data center weekly update that has and covers a lot of it, like way too much for today. But this one, because I know you're a big Meta guy, and we've talked about this as well, and it's kind of crazy to see this pivot in what they're talking about. They say Meta is in talks to rent computing capacity to Anthropic in a deal worth up to $10 billion over 2 years, per the New York Times. And I guess we could even talk the Kimi stuff, the open source model, because there's some really interesting stuff there too. But regardless, my initial take with this was two things. So one was, where are they getting the capacity from? Because it seems like they're already constrained on the capacity. Of course, they do have the deals with CoreWeave, and they do have the deals with Nebius, and so they have more of their internal supply that they can sell, but it seems like that they're already doing that as well. So I'm not sure where they're getting it. This is also a pretty short deal, and what really excites me about this, Tevis, is I hadn't forgotten about it, but I hadn't thought about it in a moment with CoreWeave. My focus has been on the other NIMBYism that's happening out there, the falling up, the misunderstanding, the debt load and the debt cycle, the way it works with take-or-pay contracts and all that. But out of the three big data center companies that are pure data centers, Nebius, CoreWeave, and Iron, which do you think is the most likely to get a long-term contract with the United States government?
CoreWeave. I love this by Big Beard, essentially anti-hunting while buying meat at the store. This is a perfect analogy to all of these people quacking about data centers and not in my backyard and all of this stuff. It's like, cool. How about for everybody that goes out to protest data centers, we revoke all of your access to ChatGPT, Claude, anything regarding AI. Oh, I'm sorry. You don't want all of these overseas productions? Great. You relinquish your right to use an iPhone. Like, like if you don't like how the sausage is made, like this is just a part of living in modern society. Sorry, I totally derailed, Roy, because now I'm semi-triggered at this. But CoreWeave is most likely to win that contract because they're a US-based company and they're the biggest in the space.
Yeah, biggest, reliable. They understand the security side. Not that the others don't. And there's been a lot of moves there too. But yeah, like almost everything that we're seeing as far as a macro, like, is just showing the demand is insane, and that's a very short contract. And so it wouldn't surprise me that there's multiple of those. U.S. government needs inference too. So, did you want to talk about the Kimi model and the costs there, or should we save that? Maybe. I mean, maybe we should save that.
And maybe let's save it for Bootleg. So, fun fact, Bootleg is not our next show. Our next show is going to be on Saturday, where we're doing our annual 2026 stock draft. And let me see if I can pull up the picture on this. So
there's a funny story with that.
Are you? Yeah, I'm going to put up the small Neil picture, not the big Neil picture. Yeah, this is the 2026 stock draft. You guys asked for it last stream. You said, why aren't we guys doing a stock draft? And guess what? We listen, and we are. And yeah, so we're going to have that Saturday at 6 p.m. Eastern. You can find it on my channel. You can find it on Roy's channel. Basically, wherever you're watching right now, you can go back there for for Saturday at 6 p.m. Go ahead, Roy.
And because on the last one, Nate appeared like a giant, which he's a big dude, I think. And Neil seems so small. He said, hey, because of that, Roy, you've got to take PayPal in our draft. And I said, okay, Neil, I'm going to put you front and center, buddy. Like, I'm sorry, I'm not taking PayPal. Not even with the buyout rumors and stuff. So there it is, a working one for Neil. But it'll be fun. Yeah, my perspective on that, like, it's just for fun. It's a little bit more open. Like, it's not. We have a pool, but it's not restricted. I believe that we're not going to do that. And I'm terrible at this, so somebody's got to lose, and it might as well be me. So I'm good at picking a small select number of stocks and holding them long term and seeing them outperform. When it's like, hey, somebody else has already taken that stock and you can't, that makes it tough when I'm really bullish on that name. So it'll be fun.
Yes. What were we talking about?
I mentioned the Kimi, the open source Chinese model.
Let's save Kimi for Bootleg on Monday. And
okay. In that case, I have one more thing that I wanted to share with you, Tevis. And I think this is a request straight to you.
Yeah.
President Trump is like, hey, Canada, would you please stop the forest fires and maintain what you're doing? Now, I'm from Alaska, so I get how vast and wild a lot of these areas are. And so
Mhm.
I don't think, like, you can correct me if wrong, but I don't think this is Canada just being like lousy with forest management, like does
It
frankly
is.
happen here in California and some of the states. Used to happen in New Mexico and Arizona as well. They've rectified their ways since then, but it's just so vast, so wild that you can't like do much about that other than just contain some of these wildfires. Lightning strikes and this happens. But I just thought that this was funny that not only was he complaining about that, but also saying, "Hey, let's start maybe charging you money for tariffs again," which it seems like that's just his favorite thing. I guess it is.
Yeah, so it's partially like, I mean, you could argue it's global warming and we're getting hotter summers and all this, but there's also a huge part of this which is policy, and it's the fact that we're not doing as many like controlled burns to avoid forest fires in the future. Um, there's a whole bunch of reasons, but it's essentially like poor forest management is leading to more aggressive forest fires, and that's leading to every single summer we get like, we're a couple days every summer we're living in a Dune movie. It was horrible here the last 2 days. I Yeah, I was definitely working from home. I was like, ain't no way. Like, it smells like a campfire, like in your house, let alone, and it was like equivalent to like smoking a cigarette every 10 minutes or something if you step outside.
Mm.
Part of it is entirely government policy. I mean, you have like 900 million acres of forest in Canada, so it's very difficult to manage all of that. But if you had actual good fire suppression policies, then you could actually make a dent. And we were in previous years, but for whatever reasons, I mean, which I don't want to go into because it's going to be too political, that is not the case. And you're seeing the results of it. And it's actually sad that a foreign leader has to step in to incentivize our own government to actually do something productive for a change. And this happened in many instances. And the forest fires is just the latest example.
I need to confess something actually, Tevis, and it's uncomfortable to do and it's hard. Um, but you know, with the forest fires there in Canada, it's my fault. When I was a small child, I think I was probably 4. Smokey the Bear told me only you can prevent forest fires, and I'm doing a lousy job. And I'm sorry, guys. I wish I could do better. It was too big of a load for Smokey the Bear put on me. But yeah, Carl, your comment inspired me. So
Yeah, man. Look, I think people are calling it out. Like, you know, uh, it's I mean, we just approved what, another, what, 90 or 900 million to Ukraine like literally a month ago. And meanwhile, we're literally getting support from California to put out our own fires. It's embarrassing. It's embarrassing.
anything else that you wanted to look at today? There's a lot of other smaller pieces of news, and I see a lot of great questions, so I'll definitely want to have time for those too.
No, we can go into question. I already have 25 bookmarked.
All right, let's go right in.
Let me timestamp this Q&A. All right. And by the way, before we start our questions, guys, uh, thank you all so much for being here. Really appreciate your time. And I think I can also speak for Roy. Like, these shows are always so much more fun with you guys here. So drop a like, subscribe if you're new here. And yeah, thanks. Thanks so much. Uh, do you guys have money to send? No, we don't have money to send. That's the sad part. It's like we'll print it and then we'll send it, and then people here will suffer because everything's more expensive. But yeah, that's not a problem for people who don't live here. Let me. Has CoreWeave bottomed? Good question.
It's close. You can look at the RSI. It may have bottomed already today. I mean, obviously, like it can always get cheaper and lower, but the reality is earnings are not too far away. It's I need to look. It's early. Well, let's see. CoreWeave earnings date. Yeah, I don't know that they've officially announced it. It should be in early August, though. that is going to be just a tremendous beat on the booking side, which is the most important side. Revenue, we'll see. I think with Nebius earlier on, a lot of analysts were really struggling with projecting that out every single quarter. It seems like that they figured that out. I think it's probably the same with CoreWeave, that analysts will be more on the money here, likely. But RSI is or was oversold earlier today. I think it got down to like 26 at one point, 25 or 26 on the daily. Usually that's a good indicator for a bounce. If you look at it on the weekly, which is a little bit stronger, it's not quite there. I haven't looked at it in a second. Let me pull that up. But yeah, between like the earnings, between like clear drivers of inference demand, I think it's already like a screaming buy, but it can get cheaper. We'll see what happens here. Yeah, RSI weekly is 41, so it could go down a little bit further. Right now it's settled. Intraday it was under it, but it's at 32 right now on the daily. So it can always go lower, guys. RSI is not like 100% guaranteed, but in a bull market, you tend to not see oversold conditions for long, unless there are just it's a severe, horrible thing that's happening with the individual ticker. And for CoreWeave, it's more of just a misunderstanding where the macro is.
Yeah, look, has CoreWeave bottomed? I think largely it has to do with the macro. As we know, a lot of these names get sold in a basket or get bought up in a basket. And we have earnings coming up. And I think that's the thing that makes me confident that we have bottomed on CoreWeave, because every 3 months we have an opportunity to see how well the underlying business is doing. And in the case of CoreWeave, like, they're growing tremendously. We're going to get updates on their data centers. We're going to get updates on what they're seeing in terms of demand out there. And I think that's going to reinvigorate a lot of investors, because right now what we've had a period of 2 months where we've had a massive run up in high beta AI related names in memory, as well as in data centers, photonics. Everything has been running up. And now earnings is essentially a test, let's say, that the actual underlying fundamentals are still there, that the story is still holding up. And a lot of people are taking profits off of the table because there's a level of uncertainty associated with earnings. Once we get those earnings, that reinvigorates and revalidates that thesis, that money is going to flow back to those names so long as the story still holds. And in the case of CoreWeave, I think it does still hold, in which case I think this is the bottom, or at least we're very, very close to the bottom. This is why I'm writing cash secured puts on CoreWeave as well as on Nebius, because I think that we're at peak uncertainty right now and we're having rotations in the macro. But a month from now, we're going to have bounced back off of those levels.
Yeah, no, I can't argue with that. Can you throw Matthew Johnson's comment up? I want to hit that one next at 642. I was actually thinking about this as well within this question, and I've been thinking about it this week as I see things falling. He says, Roy, at what price would you sell more of your holdings to put more in CoreWeave? Tevis, what price for Nebius? I'm considering it right now, honestly, because again, I don't have more money to add, not a lot, probably for the next couple of months. You got some coming in all the time, and my cash is largely allocated, like it's under 1%. So the only way I can add more CoreWeave is sell something else. So I'm looking at two in particular. I'm very bullish on them, but I've not taken anything off the table. But one is NVIDIA. I think NVIDIA is too cheap. I think it's a great opportunity. CoreWeave, like if it goes back in the 60s again, it's just an obscene opportunity from what I'm seeing. And looking at NVIDIA, I'm like, I think it's great. I don't want to sell all of my NVIDIA at all. Maybe I take half off the table and put it into CoreWeave. Air test systems is another one of those. If we see air, depending on where it settles and when, I'm not rushing into this necessarily. I'm not looking at doing it on Monday, but we're going to see how things continue to play out. But if air, continues to be elevated, it's not a bad price by any means right now. The earnings were ridiculous, but CoreWeave is just such a screaming buy. So I am considering with those two, and I mean maybe I'll like even do silly things like sell my 3 SpaceX shares and cobble together some other cash that's sitting around there, but I don't know. Like, it doesn't seem like that there's much more that it could fall. Like, it could always though settle. It could like fall maybe to like mid 60s and then just kind of stabilize there. I'm not saying it has to pop. I don't think either of us are saying like it's going to go back to all-time highs in the next 3 months. It could, but yeah.
But again,
what about for you, for Nebius or for CoreWeave?
Yeah, so I think the answer for me is in the prices that I've chosen for my cash secured puts. Okay. I have cash secured puts on CoreWeave at $70 as well as at $90. Of course, I wrote the 90s first and the 70s to sort of form a counterbalance to lower the cost basis if I get hit. Both of those are for October 16th. So I have 70 for October 16th and 90 for October 16th, right? Ideally, CoreWeave is above 90 by then, but what? We have 3 months from now until then. There's 91 days, right? And then for Nebius, Roy, I have 120s for September and 180s for, or 175s for December 18th, right? So I do think that CoreWeave is, or Nebius is going to be higher than we currently sit in December, but I am open to the possibility that by September, if it falls to 120, I will happily pick up another 500 shares in Nebius, like easily. Um, because I don't think it should be trading at that level, especially after we get another earnings result where we get more information around the build out for Nebius. So I think under 150 for me for Nebius, it's very interesting. I think around 120, 130-ish range over the next 2 months or so, I would be a buyer there in a big way. And then I think we're going to go back up over the second half of this year and into the fall and winter because, like, I mean, if Nebius is at 175 by December, I know I collected a lot of premium by selling at the money for, 154 days out. I will happily take ownership of shares at 175 in December.
Yeah. All right. Sounds good. Yeah. I like how if for newer investors, like if this is your first time, like in a big pullback, it's always going to be somebody's first time with these sort of things.
Mhm.
That can be hard to stomach, and that kind of helps you gauge where your risk should be as far as how your allocation is. But if you've been in the market a long time and you're like, hey, all that's really changed, there's a few changes. Don't get me wrong, but mostly what's changed is just the share price. That shouldn't be something that rattles you if the thesis is still intact. Now, if the thesis breaks, regardless of where the share price is, that's when you start, like, obviously, or at least I start trying to get out immediately. But the thesis is not broken here. It's very strong, and if the thesis really hasn't changed and the price is suddenly 40% less, I think it's Peter Lynch that said it. The stock market is one place where people run away from sales.
Yeah. Yeah. We have 39 questions that are bookmarked. So I'm officially closing questions. Questions are closed. If somebody squeezes in a 40th to make my brain happy, that's great. There you go. Jet Set Harry. Asked questions are closed, guys. 40 are bookmarked. If we get through them and we have time, I'll open it again, but questions are closed right now. So please don't ask any more questions. Unless it's a donation, then we'll handle that. All right, let's move on. Spain or Argentina for the final?
I mean, honestly, I'm rooting for Spain. Argentina, they won last time, so Spain can get this one.
The only I've historically been a Spain fan because I lived in Spain for a little while, and so I've been rooting for Spain throughout. I also want a European team to win, so really rooting for Spain. The only thing that makes me feel bad is that this is Messi's last World Cup, and it would be nice to see him going out at the top.
If he had, he might win the Golden Boot, like regardless. But yeah, this. It's one of those things where it'd just be a cherry on top of just the greatest of all time career. Like he's amazing. There's other great players out there. Ronaldo is no slouch, but yeah. So I'd rather see Yamal and Team Spain win. But yeah, I'll watch it, but it's not a. Netherlands was my de facto team once the United States was out of it, and they got eliminated. So, and then I was like, okay, let me root for England, and now they're out of it. So, yeah. I do see a donation, so somebody is skipping in line. Black Mamba, thank you for the donation of $20, $19.99. Beside current positions, anything else you guys eyeing if you had cash after this drop? Yes. I mentioned it before, and maybe I'll do a member video on this just because my thoughts are not like mature on it enough. I have given some here, but Voyager. VOYG. They're a really, really interesting play. And of course, all the tech stuff has been melting down, but especially like the space names in particular. Fly, what I still am kind of interested in Fly. SpaceX, there is a price, but it's substantially lower to get in. But Voyager is interesting. Now that this would be one of those like it's not a it may do nothing for a year or two. It might absolutely do nothing. But there is so many revenue levers that you would not expect with a space company there. It seems like management is very, very good. I need to look a little bit more into that, though, to be honest.
Yeah.
I'm nowhere near buying, but that's the one. Other than like two expensive names like Cloudflare is one I'd buy in just a second. Rocket Lab, I should say as well. Rocket Lab has fallen a lot.
It's getting interesting. It's getting
Where
interesting.
did it go today? I
It's
didn't actually.
$67 or something. Yeah, $67.
Okay, rebounded a little bit. Voyager actually was up 3% today
Dude,
too.
Rocket Lab at the open was at $64.
Yeah. No, I what I need to do is actually figure out where I'd be happy to buy Rocket Lab, assuming I have money at some point. The hard thing is like the reality, Black Mamba. Do I buy and start a new position, or do I add CoreWeave at $70? It's going to be add CoreWeave at $70.
Yeah, the problem is when they all fall at the same time, right?
Yeah, usually.
Okay, let's continue here. There are some great questions that made it past the cutoff, and I'm only bookmarking one of them from Blake because I want to answer it. So I broke my own rule immediately. And I also wanted to highlight this comment. We've been saying this is Messi's last World Cup for 3 World Cups. Dude, he's 39. There's no more World Cups after this one. Like, trust me when I say this. Like,
I don't know.
I mean, dude, I don't see him at 43 coming back to do another World Cup. He's already walking like the entire game as it stands.
So yeah, I think that, and we've seen this before with great players late in their career that they're brought on, the last like 20 minutes, and maybe that's all they can give, but they can make an incredible impact. So, but yeah, probably this is it.
Yeah. Therm says, did you see ChatGPT's ranking of top-rated Sophie content creators? Dr. Roy was number 50. I didn't even know there were 50.
There's probably not. I'm just down so far.
Yeah.
That guy's the worst.
All right.
He always says $11 price targets.
Yeah. Let's continue. What price would y'all buy Corning or Marvell at?
I actually don't know. Corning is not one that I know well enough. I would have to look a lot more into that business, and I'm not done that yet. Marvell, I'm not sure. I understand, Marvell and the attraction, and if Jensen's right about the price, which I don't know, but yeah, they have a very important space in this AI, but I prefer like super concentration, and so like I'd just rather buy more data centers or maybe look at some power companies. I know Bloom is under attack because of the short report. Maybe get in something like that. Get into Broadcom. Like there's a lot of other names and ways that I'd probably play it with something. Yeah, Jensen is excited about that though. If there's any Marvell shareholders, I'm kind of curious what you guys are thinking.
Better buy CoreWeave or Nebius right now, thinking 27, 28 leaps. I think CoreWeave, but Nebius is also pretty nice here in the 180s. When we were asked this last week, Nebius was in like 200 to 210, so it's getting more attractive. But CoreWeave is definitely more oversold, I would say, than Nebius at this point.
Yeah, I agree.
Why speak for the Koreans? Is there a Korean YouTuber you can get on the show? Yeah, I don't know any Korean YouTubers. That could be fun if we can get some, but I don't know if there are like buy and hold Koreans. They're either like
that would be fun.
Crypto people.
Yeah. I know one actually. I do know one. His English is not amazing, but he is the nicest dude. He's a huge Palantir guy too.
Yeah.
So.
Actually, hold on. We got a donation. Roy, appreciate your videos on air. What do you expect from Robinhood earnings call? Is it a red flag that Vlad sold $42 million worth of shares July 6th, 3 weeks before the next earnings? Last time he also sold prior to not good earnings.
So thank you for the donation. Really appreciate that. Yeah, Robinhood is going to be really, really good as far as the numbers. I haven't looked at analyst estimates, and I need to do that before earnings. There's a couple of things happening. So if you look at the monthly metrics, and then they released some preliminary monthly metrics a little bit earlier than they usually do. They had to do that because they took on some senior notes, and so they had to disclose the information. We're looking at most things outside of crypto being an all-time high, including prediction markets. The revenue on that, depending on how they structured the Rothera transition on some of those things, but even regardless of that, like the worst case scenario unless I miss something massively with predictions market, they're going to earn more in predictions markets this quarter than they do with crypto. And that, I think, is going to excite a lot of people. Rothera is going incredibly well. The Robinhood chain, let me pull this up real quick just to show you guys. This is what they announced, of course, last summer, as far as that they were building and developing this. It's one of like a lot of platforms that they are actually building at this point.
Actually, let me be right back while you talk about this. I'll be right back.
Can you throw this up real quick? Okay, perfect. All right, so you can see here, we don't need the full year. Well, let's do the 1 month because they've just launched it. Testnet was previous, so you can see daily active users is pretty robust. Transactions, you're looking at 9.8 million. You're looking at fees. Like, this isn't like the most and the largest fees in the world. But again, this is on top of what they usually would generate here. So for this quarter, not a huge deal, but like this is going incredibly well. Their actual revenue that they're making, also very similar to the fee structure. I'm not actually sure why they have both of these. But yeah, regardless, again, this is a platform. Now, the one thing that I'll say with the Robinhood chain, John Ma, who is the CEO of Artemis, I know him personally, a really nice guy. He's noted like the on-chain volume is mostly meme stuff, but that's also the way that Coinbase kind of started with their own chain as well. So if they stay there permanently, that's not durable. It's not the best way to build the ecosystem, but that'll always be something that Robinhood has. So you have all of those things, all-time highs with a lot of metrics. The options, the margin looks like it's going to be. It wouldn't surprise me as well with securities lending, although I'd need to double check some things just with the IPOs. Not all-time highs, but like good numbers on that one. And it just depends on analyst expectations. The stock has risen quite a bit. So how the stock reacts, I'm not sure, but man, they are killing it as a business. The only things that are not like really working well, obviously, crypto. Robinhood Social is not something that I've really been that excited by. I've not used it, but I don't know that was the right launch. But yeah, really, there's a reason why the stock outside of the last couple of days has been moving despite crypto. So, to answer the rest of your question, sorry. Insider sells, it's a nothing burger there. I don't know why Vlad sold, but the dude has a lot of stock. The dude just does. And there's many reasons to sell. There's really only one reason to buy. You can look not that long ago, and there was a director there for Robinhood that was doing insider buys. But you can also look at Palantir and look at the massive insider sells leading to the run-up too. It's just one of those givens in tech companies with high stock-based compensation. And I don't think Vlad gets a salary from Robinhood right now. Or if it does, it's very low. He's a billionaire, but it's mostly on paper.
Yeah. What a weird flex. He's a billionaire, but mostly on paper. Matt, thank you for being a member of Roy's channel for 17 months. He says, no Lambos. Yeah, Matt is basically on food stamps at this point with Rocket Lab at $67. He only bought it $4, so he's struggling. All right, back to what we were going to answer. If my CoreWeave cost basis is 10% of my portfolio when I bought, but it now is more like 7 or 8%, would you still add to position to bring it back to 10%? I have to sell some Meta or other to buy.
I mean, like that's up to you and your risk tolerance. But like if you're like, hey, if you're not sweating when CoreWeave has been falling all this way, and you're like, oh man, it's such a buy, and you're just looking for money, that's where I'm at. And again, I mentioned the two names that I'm looking at, even though I'm very bullish on them, trimming to buy more CoreWeave. So if I was in your shoes and swapped, I would probably do that. Well, obviously with Meta, but only you can answer that. But if you if you've not been spooked by the drawdown, if you think the market is way wrong on this, maybe look at doing that.
Yeah, I wouldn't focus too much on the like percentage of your portfolio. Generally speaking, even large funds, they'll do rebalancing once a year, maybe twice a year. But I wouldn't focus too much on like, oh, it has to stay at 10% of the portfolio. If you're more bullish on CoreWeave and you see more of an opportunity there relative to Meta, then yeah, go for it. But if not, then like for me, it's like at some point, Nebius was like 45% of my portfolio. I don't care. Like when I bought it, it was 10% of my portfolio and it just blew up. So I'm not really going to be too fussed about now, if you want to have good hygiene, then yeah, you could rebalance and take some profits here and reallocate them elsewhere. But it's up to you. Like, don't get stuck in the mechanics. Understand the logic behind the mechanics, right? Like, don't get suffocated by the processes. Understand why you're doing certain things. If you're bullish on CoreWeave, buy CoreWeave.
Yeah.
Yes, I am, as can be seen by the background, back home in Canada, unfortunately. And yeah, we'll see how long that lasts before I'm itching to leave again. What's the deal with the smoke? We went through that. Do you hit up Koreatown in Toronto? I'm in the area often. I do not, but DM me on X and we'll grab a beer. Yeah, Korea did raise rates. Roy talked about that. Would you ever add ETF or some diversity to your portfolio? Yes. I talked about this last live stream as well. I think it's just good portfolio management. Could the same effect happen if everybody on margin sold at the same time? I think we're still on the Korea topic.
Yeah. No, absolutely. Yeah. There's whether it's forced selling pressure because of margin calls or it's people all saying, hey, let's get on a margin at the same time. Yes.
Big Beard says don't meet up with people. That's how you get stabbed. Yeah, I mean, if
You
dude
can't get stabbed if you stay locked in your house all day.
Well, Jer, if you fly all the way around the world, yes, I will happily have a beer with you, my friend. Lionheart says, how are those puts printing, Tevis, and anyone buying Rocket Lab? Yeah, look, I mean, I think the puts are doing fine right now, but they're not up today for tomorrow trade. I'll check in a month. And maybe I might sell them early. Like, I'm not going to hold on until December for some of them. Like, if Nebius decides to go on a run and goes back to $300, yeah, sure, I'll take 50% profit on the puts and leave 50% on the table. It's just about risk management. But right now, they're doing fine. As to buying Rocket Lab, I think we're going to have probably a bigger stream about that at some point, Roy, if it stays down here.
It's interesting, yeah.
Roy, what have you uncovered so far on Voyager? Any plans to do a future stock tank episode on it? I like this.
So Wealthmatica actually is the one that's done a lot of the legwork, and he has a really good Substack article that I've referenced a couple of times, which has helped me in my research. Like I don't just say, hey, I'm going to read somebody's Substack and buy a stock. But when I don't know enough about it, like I know some just because the Palantir connection back in the day and I was paying attention to it. But it's a much more complicated business than I was initially appreciating. So what I'll probably do personally, yeah, he's great. And check him out. But I would rather buy Voyager than Zeta. And I think Zeta is a good company, good stock. I prefer great ones. I think Voyager might be great, but needed more like. So probably what I'll do is maybe a members only video just saying why I'm finding it interesting and things I'm looking at, things I still need to investigate. Probably a short video, maybe 10 minutes. But if it does look really compelling, we might look after earnings season, Tevis. I need to do one with Figure with you guys anyway.
Sure do.
But I think Voyager would be a good one. Wealthmatica, he pitched well, so.
Sure did. What do you think about having your emergency fund parked in JEPI or QQQI? Any advice?
Emergency fund should be cash, or incredibly liquid. Like I know the temptation, and it depends on how big your emergency fund, I guess. Like if you have more than 6 months of all your expenses in cash, above and beyond that is not an emergency fund. Go invest that if you want to. But if you're comfortable with a 3 month or whatever, and then the rest is in JEPQ, that's fine. But whatever's actually your emergency fund, where you're like, hey, I need to have this and access to this, don't put that in anything else, because even with those, even as great as those are, when you most need it, you might see that you have a lot less money there, and it's for emergency funds.
Yeah, I'm not even gonna. I think that's very sound advice that Roy is giving. Emergency funds should be in cash. Please follow that.
Mr. Degen said that. All right.
Yeah. Definitely don't do anything else with your emergency fund, like me. Are we bullish on Exxon or VG?
I own VG. I did take some profits on VG, and I hated doing it, but I was like, I got to get some CoreWeave money for somewhere. Of course, it was when VG was just under 12, and now it's at close to 14. So, but I do own some, and it's. I plan to have it as a long-term hold. I think it's a great company. Mike Sable, great CEO. They're doing a lot of things well, and they, of course, benefit from what's happening overall. ExxonMobil, I don't know that I'd ever invest in it, but yeah, I mean, like, I think they're in a good place. Not so good, no.
Yeah, I mean, it depends, man. It depends.
Are you in any? You're not in VG anymore, are you? Or do you still have some?
Sure am.
All right, cool.
Sure am. Yeah, I got covered calls on VG for July 31st that are probably going to get hit. I think those are at $14, and in which case I'll be out of VG if they get hit. But yeah, I don't know. I think like I was thinking about selling my VG actually today and just canceling the covered calls and just selling them early. But then I said, you know what? It's not a big position. It's a couple of percentage points. Like, just let it ride. Who cares?
Yeah.
Are either of us bullish on Intel?
I'm not.
I don't know enough about them to be one way or the other.
Yeah, I mean, I think that they're better than I gave them credit for a year ago. It helps when you're given basically infinite money by the U.S. government. They've stumbled so many times with execution. I know that they've transitioned a lot of different leadership, but not at 95. No.
Yeah. Let's see what else. But what do I have to buy to be rich next year? Great question. If I knew that, I would also be rich next year.
Go back in time and buy air test systems in January.
Mm-hmm. Yeah, remember my Weeble phase, dude? This was like, I held Weeble, I think, for 2 weeks, made some money on it, got out. So yes, I do remember that. I think I made exactly 2 videos on Weeble, like all in the same week. And one video was like, here's a new stock Weeble. And then the next one was like, here's why I'm out of Weeble. So yeah, that was
it made sense at the time. Yeah, and likewise, I got in and out pretty quickly, made some money, and I'm like, leadership, what are you doing?
Yeah, just the talking stage with Weeble. Not even
leadership is such an important part of the thesis. If I don't trust the leadership, I'm not going to buy it like really at any price.
What if you sell Nvidia 300 puts expiry 2028 and collect the cash and put it into JEPI? You earn 8% on cash collected and also put the collateral on JEPI, earn 8%. It's like a synthetic long on Nvidia. I mean, sure, but if Nvidia is at 150 next year, then that 8% won't help you too much.
Yeah, but, I mean, like, if you're doing that and you're willing to be in JEPI, like, why don't you just? I'm not giving financial advice, but I'm saying look at just taking on margin, which is lower than that rate, buying JEPI, using the dividends, to pay back the margin.
Not even that, dude. I would say, you know, buy JetB, or like take 8% of your position. Let's say you have 100K, or I don't know, 10K. Take 8% of that, buy leaps on Nvidia, and then invest the rest into JetB. And it's basically like you're still making a long bet on Nvidia. You're just doing it with way less capital.
Yeah, that's true. Yeah, they might have portfolio margin, but yeah, if they don't, it's using a lot of capital.
Yeah, let's not get ourselves stabbed, Roy, please. No financial advice. Do whatever you want, dude. Yeah, if Nvidia's at 150 next year, you got bigger problems. I agree with this. Yeah, or sell options. This is also sound advice, sage advice. How much of the sell-off was due to emerging Chinese models? This is the Kimi conversation, right?
Yeah, I think none of it should have been, but some of it is, just because some people think, oh, open source means it's free and that you don't have to pay for inference, or like, hey, these are. I'll pull this up because it's there's a related question to it. Or even like, hey, it's very cheap for inference because the training cost was very cheap as well. But the reality is, it's really not. And so there's a really good post here. That's the wrong one. Okay, give me 1 second. What do you say on this, Tevis, while I'm pulling this up?
I mean, there's always going to be jitters around that, especially after DeepSeek shocked the markets. But I think it's more of a macro point around like, yeah, you're going to have models that are not US, and China is going to compete in this race. Ultimately, it makes me sit more easy at the picks and shovels plays, because the more competitive the landscape is, the more these picks and shovels are going to be selling like, gangbusters, right? If you think about it from that perspective, then ultimately as a consumer, I'm going to get a better product because there's going to be more capex for the US to compete with Chinese models and vice versa. And then on the other side, as an investor, well, the data centers are picks and shovels play. So I'm good on that front too. And the rest is just jitters.
Yeah. So this is from Creative Strategies. I don't know this firm. I saw somebody else quote this post where it talks about both the score. So it's kind of like the ELO score. It's just a different type of leaderboard. So how good something is at completing the task. And so Kimi, like, very good, respectable, a top 10, $3 and 376.9 estimated per task. And then we can look at estimated cost per task again over here. It's very good, but again, people are acting like Kimi is going to put Anthropic in bankruptcy and OpenAI as well. The reality is that's not the case. There are a lot of other cheaper models too. Grok is like obscenely cheap, 4.3, but it's still very good. So inference is still a cost with this. A lot of the focus has been on like, hey, the training cost is really, really cheap, and it is, and it's hard to pin down how much is because of this, but certainly a large part of that is because of distillation. Just taking existing models that have already been trained, and you don't have to pay the training costs that way, and all of a sudden use that to accelerate your own bot. But it's certainly a factor. It's not a zero thing at all. And there's a lot of other nuances that we'll talk about, I think, more on the Data Center Monthly. But yes, part of the sell-off was because of this and the misunderstanding. Open source, A, is not free. B, these models are cheap and efficient, but not as much as you might expect reading the headlines. And a lot of times people only read the headlines.
Yeah. Thank you for the $5. The question is, in a portfolio of CoreWeave and Sophie, what percentage would you allocate to each if you started today and are looking at 1 to 2 year hold for each? I think personally, I would go 80-20 Sophie CoreWeave personally, just because, like, I don't know what assuming that this is my entire portfolio and assuming I don't want to blow it up, I would just go 80-20 just to be safe, because we're going to go into a rate cuts type of scenario in 27, 28. And maybe that 20% in CoreWeave, I might go options in addition to shares. So I get some leverage there. But yeah, I don't think I would want to go the majority CoreWeave, even though I agree it's a huge opportunity here. I just acknowledge it's going to be like pretty volatile. And I think for me, I would rather play it a little bit safe because there's going to be tailwinds for both. Roy, I'm sure you're different answer.
I'm the other way around. I am bullish on SoFi, of course. It's one of my larger positions, but I'd go heavier on CoreWeave. So these are going to move around a ton. We already see the numbers that are. This is as far out as these projections go. So 15th of September, 2027. And we can see we're all over the place. This is the current rate. And so the market is currently weighting hikes a lot more heavily than cuts, although some people are expecting, let's stay the same or maybe one cut. But that's a very, very small minority. Now, I think the market is way too pessimistic on rate hikes happening. But I think that with CoreWeave, no matter what happens with Hormuz and rate cuts, that product is going to be in incredible demand. And NIMBYism isn't going to change that. Meta building these things out, which might come online in 2031. 2032, that's not going to change that. They're in the middle of a acceleration as far as their revenue, which most of the overhang for CoreWeave is just debt fears versus revenue versus like free cash. People that are saying free cash flow, I don't know. They don't understand how CapEx works, I guess. But yes, not hypothetical, not financial advice. Put the blades away. But no, CoreWeave, I would say 80% CoreWeave and 20% SoFi, just because there's a lot of uncertainty with the rate cuts. And then there's one other thing that's happening too. I was talking with a realtor who's been in the business for a long, long time. There's a lot of factors that are basically indicating that the market is going to get a lot worse. And that's going to cause some pressure on not just the mortgage, which already is terrible for SoFi, but also a couple other things too. So I'm not looking to cut SoFi. I'm not looking to cut Figure or anything like that. I'm not sure when we'll hit that inflection point, like Teva said, and we start seeing some rate cuts. The companies don't need that to survive. They don't even need that to thrive, but the stock might. So I'd rather do CoreWeave.
Well said, Roy. All right. Thanks again for the donation. In what catastrophic situation will Nebius go to zero or very close to it?
That the Russian leadership defects back to Russia and says, we're taking all of our money with us. No, there'd have to be like some sort of massive fraud, though. I don't see any scenario that's realistic outside of that.
Yeah, AI is banned in the US. Turns out to be a bubble. It's not real. I don't know. It's not like, I mean, sure, you could argue if we get into like some massive world war, like you're going to get pretty close to the bottom, but
yeah, it won't go to zero either there. I mean, the US government needs inference and businesses don't stop being businesses. So yeah. But no.
Speaking of, do you think at some point Trump will, quote, hit the red button on Iran? What's the turning point? I know we spoke about boots on the ground last pod. I think that would be the most we would get. I don't think we're going to get anything further than that, obviously.
Yeah, and probably just a very selective, like a couple of islands. Still wouldn't be good. We'll have to see. I don't know. I expected this would last a lot longer than people had anticipated when it began. It's lasted longer now though than I expected. So I hope we're not in a situation, Tevis, where we're still talking about this 2 years from now.
I don't think so. Tevis, would you want a data center right next to you? I am pro data center as long as it's not by me. Yeah, like I think this is a very common type of stance. But look, man, do you know how much industrial zoning there is? Like how much land has been zoned for industrial use in the States? Like it's, if you have a factory or if you have, you know, some type of industrial production, like it's not necessarily right beside the residential areas. The US is massive, okay? And especially like a company like Nebius, for example, like they're building internationally with Wales, with Spain, with Finland, with France. You know, they're now thinking about Australia as well. You have so much. It's not like, oh, it's either going to be right next to you or we don't build it at all. Like that's just silly to make it that, you know, black and white.
I actually vote that we build all data centers right next to wherever Matthew Johnson is, as long as it's not right next to me.
Just
He
surround
can't
him
move next to me.
completely. Yeah.
Yeah.
He's just like on an island, and it's just him in the middle of his house, and there's just freaking data centers all around, like helicopter and supplies. But yeah, anyways, I just think that it's a very, black and white way to look at the argument, when it's in reality, it's like the entire world is just shades of gray. Black Mamba wants to build a call she bet around our stock draft. I don't even know what the procedure would be for that, but that would be fun.
Yeah, that would be.
Build data centers around Sophie Cunningham.
She's awesome. Just
Yeah.
awesome people can be wrong,
I mean, I don't even think she's just uninformed. Not necessarily that like she's flat out wrong. I mean, she is that too, but like I just think uninformed is more accurate.
Yeah, we've all been there.
Yeah, exactly. Uber delivery hero acquisition, bullish or bearish?
I heard that. I don't know anything about it, to be honest. Do you have any take on?
No. I mean, why not bullish? Like, they're further consolidation. We're going to get, probably some type of benefit on Uber Eats, like cheaper prices or whatever. I mean, you could argue the other way around, like they're cornering the market and they're going to increase prices. But yeah, I don't know. I don't really have a educated take.
I mean, either way, like it removes a competitor from the market, and they've in the past done pretty well with acquisitions. So, but I don't know enough about it. But I lean towards bullish.
Yeah. Jappy says, get Sophie Cunningham an iron patch on her jersey.
Can you imagine?
I mean, it would be ironic.
If Iron did that, I would buy some Iron. I honestly would, just for the memes. Get 100 chairs.
Mm-hmm. All right, next question. Any changes to the new stock draft format, and will we get quarterly meetings? No, on the quarterly meetings, I can tell you that much right now. Format, Roy, what do you think?
I don't think there's too much of a change. Like the biggest is we're allowing people to take, I think, off of the draft sheet, like that's there to advise. I don't know if we're doing that like what you can pick all the stocks in the world. We're still talking and discussing whether ETFs are allowed. I'm saying no, that this is a stock, not stocks draft. And, otherwise it's just like, I'll take the NASDAQ. I'll take the S&P 500. It's boring. So let's make people buy Joby.
Yeah, my vote is to not have ETFs, because when I pulled the list of ETFs, it's like, I'll take SoFi. It's like, great, I'll take SOFX. The 2X ETF. Like, it's just not fair, I think. So, and we have about 354 tickers that I have like bookmarked or saved there. I'll show you guys. So this is the sheet that I've been putting together, and there's a lot of tickers. So we'll see. And as for who is playing in the stock draft, we're probably not going to have these two. It's these 5 guys: myself, Manuel, Dr. Roy, Neil, and Nate. So
I'm a doctor now, so clearly I'm going to have better results.
We'll fix that right now, Dr. Roy.
Nice.
Yeah. So we'll see. Tune in on Saturday, 6 p.m. Is there a prize for winning or a punishment for losing? You're asking the real questions right now. Are we betting on this? Like, what are we doing here?
Not that I know of. I think it's just for bragging rights. So, but I'm open to it. So like more of a if the winner is like, hey, everybody donate $100 to charity of choice or something, something like that. But
yeah, the charity of choice is the Bootleg Weekly podcast. So we'll figure it out. I feel like you guys need to do a round where you have to take a company under $1 billion market cap. That could be fun.
That would be fun.
It'd be really fun. And air doesn't even count anymore.
Does not count anymore. Yeah.
Okay. We will take all of these under consideration, and we'll let you guys know on Saturday what ends up happening, which is tomorrow, by the way, at 6 p.m. Eastern. Any interest in Bloom dropping near 200? Yes.
Yeah. Yeah, the Scandium thing I don't know enough about. I need to look into that because I read the short report and it was interesting, and I'm like, I know nothing about Scandium. I know what people are saying, so the product itself is really, really, really good. But when you can't source the raw material, or you might have challenges, and I don't know if they are. So, but I am interested.
Loser buys BMNR.
or PayPal. Yeah. I'd rather own BMNR than PayPal, but
PayPal is not even going to be PayPal by this time next year.
well, the board rejected the offer. I'm still working on the article. It's pretty close. I think that there's a number of other candidates out there. I don't think, I was kind of proud of the board for rejecting it, but like honestly, they have no plan on how to run the business. So, and I wouldn't want to hold it.
Yeah. Yep. Yeah, look, Black Mamba, if you know how to set up a call sheet draft, then you go ahead and do it and share the link with us. I don't know how to do that, nor will I try to learn. CoreWeave, CEO sold shares. Yes, Roy covered this earlier. Will ServiceNow pump or dump on earnings? Yes. Last quarter, it dropped 18%. I think this time around, it's going to pump because there's a lot that the market I don't think is pricing in. I'm going to make a full video about this. Their acquisition is one. I think if we see their renewal rates stay as high as they have been, their growth rate sustaining, and their AI revenue beating expectations, which Bill McDermott said it would, this is fundamentally mispriced at this level. So I think ServiceNow, I don't know. I'm optimistic going into earnings. Of course, it could sell off, but yeah, I just think the market is missing the mark on ServiceNow. So we'll see what happens. Earnings are on Wednesday.
Yeah, I don't know enough about it, so I'll go with Tevis's answer. As far as like what's expectations and what they'll do this quarter.
Yeah, Kieran says, hopefully it dumps. I don't have a full allocation. Yeah, we'll see if it dumps. If it dumps like last quarter, 18% on the back of just a complete overreaction, then yeah, I will be buying more. That's for sure. But look, if it pumps, then I might be letting go of my position because my initial swing trade idea was I buy it at 90 or 95, wherever I bought it, and I sell it at 140 and I make 40% in 2 months. Can it go to 140? I think over the next month, if they do good earnings and they pump, yeah, absolutely it can. We'll see. Thoughts on INFQ or Quantum?
NFQ.
No thoughts. We can keep going.
Yeah, I don't know that one. Quantum, I'm not. I think it's too far away.
Yeah. Tevis, why aren't you writing cash secured puts on SNPS? I don't even know what that is. Is that synapses? I don't know what that is.
Yeah, synopsis. You're right.
Yeah. I don't know anything about the company. I don't invest in the company. I don't know if I want to hold the company. So that's why I'm not writing cash secured puts on it. What are the chances Elon buys PayPal back?
This would be SpaceX acquiring PayPal. Because why not? It's just a big conglomerate. Honestly, it's not as dumb as it sounds. It would still be kind of dumb. But if Elon did acquire PayPal, he'd do a Twitter where he goes in and he just guts the firm. And I hate that for those that are employed there because they have a lot of employees. They're over 20,000 still. He might gut them down to like 2,000 or 3,000. In which case it becomes highly accretive and highly valuable. I'm not sure that the board, I'm not sure what the board is expecting as far as an offer, but maybe 70 or 75 on the share price, which would be like 66, I think, for market cap billion. And Elon could do that easily. But I think it's pretty low. Like I have not seen him talk nearly as much about X payments as he was in the past. If he still has serious ambitions on that,
What do you
PayPal,
mean?
of course, would accelerate it.
X money is live.
Yeah, but like previously, he was talking a lot about it. He's not. It is live, but it's not. I don't think there's anything like that special with it, honestly.
Mm-hmm. Yeah. Yeah. What are 20,000 employees doing at PayPal? I don't know, man. Creating some shareholder value, probably. Just kidding. All right. CoreWeave is borrowing billions to buy GPUs that lose value every quarter, but the debt doesn't shrink with them. What happens when the chips are worth less than the loans against them? Roy, this is all
I
you.
mean, they're making money at the same time. So the reality is, if you look at this, is one of those. Maybe a year ago, if you asked me, I'd have given a very different answer. But we have a number of things happening. So one is like older chips are still fetching fantastic prices for inference, and we've seen a lot of durability in that. And I think just given the demand, and also not just the demand, but the CUDA software itself of NVIDIA's tends to get the most out of their chipsets for a long, long time. We don't know that ASICs will be like that necessarily, and I think that's one of the edges that NVIDIA has and also CoreWeave has because they're using and utilizing NVIDIA product so much. Second is that if you look at the revenue curve, they have a tremendous amount of revenue that's coming in and it's accelerating. Even through 2028 projections are for $3.03 EPS. That's positive, not negative. That can shift dramatically, but the revenue is pretty easily projectable out that far just with the data centers coming on and the capacity. So to like make this just a shorter answer, by the time these contracts get to the end of their life, and when you would be like, hey, it's because of depreciation, these are worth zero, they've already made plenty of money off of them, and they're not worth nothing on the other side either. So, yeah, it's if you can borrow $1 and make $1.30, why wouldn't you just keep doing that?
Yep. Agreed. All right, let's see. When we all see people highlighting gains, we all see people highlighting gains, but what's your thoughts on holding stocks at a loss down 20-30%? Is your conviction tested? Yeah, absolutely. But yeah, it's absolutely tested. I'm not saying, we're going to sell. I've been down 20-30%. I've been down way more on companies. And if you have real conviction, you'll double down.
Yeah, I mean, that really helps you look at your conviction, whether it is tied to a share price or somebody else's thesis or your own. That's the time to continue to look into the stock, look at the news, look at what bears and bulls are saying, and if you're like, hey, this is a great opportunity, it's easy for me to hold. Versus like if the thesis is broken. So we'll take two different companies real quick. Palantir back in 2022 just got destroyed. It went under $6 even for a little while. I saw that as a screaming opportunity, and so I took money from outside, not outside the market, but in the market, with some busted theses, and ended up just getting 90% Palantir at that point. Versus PayPal here recently, it also lost money on it, and the stock price had fallen. And I think I sold lower than we are right now, but what I bought, it's fine. I'll be okay, guys. But the thesis broke. And so I got out. I didn't want to hold it. I don't hold stocks that the thesis is busted for. I don't mind holding stocks that are down just because they're down for whatever reason, as long as the thesis is intact.
Yeah. Tevis, why do you write cash secured puts so far out? Does that not put constraints on your cash? Yeah, so I answered this in a comment that somebody had actually. I said, if I'm writing out 2 weeks or a month, like pretty close in time, generally speaking, I'll have the cash available to be able to, take ownership of those shares. But if I'm writing out 3 months or 2 months, I won't have the cash available. So I'm writing, backed by margin essentially. Do I want to be in margin? Ideally not. Have I been in margin before this year? Yeah, I have. And like you'll pay, a small fee, a percentage to be in margin. But I give myself extra time. Why? Because I get paid more in terms of premium, which gives me optionality if I want to roll out. Number two, by that time, I will feasibly have more money to put into the account so that I can actually back up those shares to some degree. And then number three, I can give it more time to play out. So as a result of it being on margin that carries higher risk, I want to give myself more time to maneuver and handle that position. So that's why I write far out in many cases. It's because if I'm writing like multiple months away, chances are I'm doing it on margin. Which is like, please do your own homework, dude. Like, this is not, the 101 lesson of investing. This is a little bit more like you can blow up your account pretty easily. Yes, please learn about margin. CoreWeave at 70 or Nebius at 170, Roy?
CoreWeave. Nebius at 170 is not bad at all, but CoreWeave, it just, I don't see it going much lower. Like it could, but like if you're looking at long term over the next 5 years,
yes,
yeah, both are good though. But yeah,
both are good for sure. What would you have to see from SpaceX to buy? How low is your buy level? Blake asks, and I think this is a really important question because what do we say when SpaceX went public? We said it's going to suck out all the oxygen of all the other space-related stocks. And what's happened, Roy? We've had exactly that scenario play out in real time. Since the SpaceX IPO, here's what we have. We have all of these space-related names falling. And the second thing that we said was we said that SpaceX, similar to all IPOs, similar to Cerberus, similar to everything else that went public, Figma, everything else that went public this year, pumps in the initial days on the back of that excitement and then dumps because you have a lot of profit taking. And in many cases, IPOs are just overhyped from a valuation perspective. SpaceX is now trading below their IPO price at $125. What are we thinking here? Is this a buy opportunity? At what point does it become a buy opportunity?
Yeah, I have it at 800 billion as fair value, and I don't know that we get that, but that's around $60 per share. I would be extremely interested in probably just buy at 60, and it may well be above. I'm doubting that we get that because Elon premium, but I would need to also do more homework too. I think if we see it fall, into the 90s, I need to really start doing a lot of homework then and figure out like, okay, is it actually higher than 6? Like, do I like it at 75? Do I like it at 80? But if I bought it too, like this would be like a long-term hold. I wouldn't necessarily be expecting like, hey, in the next year, it's going to pop up to an all-time high or anything like that. It's a great company though, but it's still very expensive here. That's cutting it in half if we get to 800.
Yeah, for myself, I wouldn't really be interested in SpaceX anywhere near the triple digit prices. If we get under $100, then I'll start looking at it more heavily. But the real play for me is looking at some of these other space names that have been hurt. Rocket Lab at 67 is a much better buy, in my opinion, than SpaceX at 125, just because I think there's more optionality there in terms of where it can go and the runway that it can have. Of course, SpaceX is the behemoth in the room, so that is going to be the leader. And all the other space-related names are going to trade on the back of that one. But in reality, as SpaceX drags everything else down, I'm going to be looking at opportunities in ASTS, in Rocket Lab, and in other names before I look at opportunities in SpaceX. That's how I'm personally playing it. But right now, in my opinion, it is still too soon for me to enter any space-related names. I think we could even get more pain ahead, but TBD. We'll see how it plays out.
Do you have a price to buy Rocket Lab?
Honestly, man, I would probably buy Rocket Lab in the low 60 range. I would start sort of nibbling some shares. And if it falls even further than that, I could definitely see myself building a single digit position in Rocket Lab. Because from the recent launches and what the company has been doing from an execution perspective, I think it could trade higher than where it is. But the way that I would see Rocket Lab is similar to how I've entered ServiceNow and similar to how I've entered, some of my other recent trades like Nokia or whatever. It's more of a swing trade for me than it is a long-term buy and hold. So if I buy it in, $55 to $60 a share and I sell it at $90 a share, I'm very happy with those gains because it would be oversold as a result of the macro, especially because SpaceX, like we said before, has really sucked a lot of the oxygen out of the room. Once the market stabilizes to that and we revert back to the mean, because Rocket Lab is still executing, they're still launching successfully, and they're still growing as a business, then yeah, I could see myself flipping it in 3 months or 6 months from now for a 50% profit. Like that's more than enough for me. I don't necessarily need to hold it for the long term. But I think at these prices, I'm starting to get really interested in nibbling on Rocket Lab in the 60s. But I think if it falls, even below the 60s, it'll be too good for me to pass up. Similar with ServiceNow, right? ServiceNow was above $200 a share. I bought it under $100 a share. I think with a lot of opportunities in the market, you cannot, like you have time at your side to be able to wait to pull the trigger at the optimal time.
Right. Yeah, usually. Yeah.
Yeah. June says it's a 30% position for her. Yeah, I mean, look, I think Rocket Lab, of course, is an interesting one because our dear friend Matt is so invested in it. It's also an interesting one because Roy and I both had the opportunity to buy Rocket Lab in the single digits and neither of us did. And so it's sort of like the one that got away. Yeah.
Yeah. But I've mentioned this before with Rocket Lab. Like, yeah, that's probably my biggest investing mistake is I saw the thesis, made a lot of sense at 7 and some change. I'm like, I'll wait for a pullback.
That's it.
And the rest is history. So I'm not so prideful to A, admit when I made a mistake, and then B, if the market gives another opportunity here, I'm interested.
Yeah, and I mean,
but yeah,
look, like Blake said, Rocket Lab was trading at $150 a share 2 months ago. Yes, you are catching a falling knife, but at what point does the risk completely, get overshadowed by the reward? Because if you fall from 150 to $65 a share, how much more can it still fall if it's a macro reason that it's falling? Nothing fundamentally about Rocket Lab is causing this fall. It's just a macro pullback of investors taking risk off the table. Yes, it can fall back down to $60 or $50 or $40, but at some point, it's going to revert back to the mean. And I think that's the entire trade. If something is oversold, I will buy it for a swing trade. And in the case of Rocket Lab, it's getting really interesting at these levels.
Yeah. I think, like ranking space stock opportunities right where they're at, I would say Voyager's probably number one for me, then Rocket Lab. And then like further down the list is Fly and nothing else. Yeah, Fly is interesting, Michael.
Yeah. Thoughts on gold?
I mean, I've not really paid attention to it recently, so there's a need for it, as far as the actual metal itself, and people like it as a hedge. But I don't know that the hedge stuff is going to be necessary. Like there's always times when it gets a little bit of spike, but yeah, I don't know any gold. You have any thoughts on gold?
No, I mean, I don't own any gold as an investment. But yeah, I think it overextended. It had like generational highs and now it's just reverting back to the mean, right? So I don't think like back when gold and silver were both at like all-time highs, we were saying like, hey, this is going to go back down at some point, and it did.
Throw up Joppy's question there. Talking space stocks and gold, what if we mine an asteroid with gold? Gold is one of those things where there's a lot of applications that really do benefit from gold. So it's one of those where it would have obviously a big impact on gold prices, but it wouldn't like destroy the economy. In fact, there's a lot of spaces that would benefit from having access to cheap gold.
I'll give you the trade right now. If asteroid mining becomes a real thing and you're actually going to mine gold, you just put a pair trade on. You short gold, buy space.
Yeah.
And speaking of a pair trade, Black Mamba says you can do a pair trade in long Rocket Lab, short SpaceX, since we know that valuation is crazy. The problem with this is that smaller space companies will trade in sympathy with SpaceX. So I think like if SpaceX missed a launch or pushed back a launch yesterday, they fell 3%. But then ASTS also fell, Rocket Lab also fell. All of these other guys also fell in after hours as well because they're just smaller players in the space. No pun intended.
Yeah, eventually they'll break out of that, but yeah, the big players tend to weigh on the smaller ones. It's just the way it is. Yeah, Voyager, man. I got to do a little video on it, I guess. I just pulled it up. I'm like, oh man, it's just so. I won't do it. Yeah, I'll do a mid-burst video at some point though. It's got to be soon. Yeah, that is one of the nice things though. Like Teva said earlier, there's names out there that you thought, oh, we'll never get an opportunity to get into this. And then because of SpaceX and the IPO phenomena and it dragging down these other names, like we could see, if you think Rocket Lab is attractive right here in the 60s, maybe it hit 70 today again. I mean, it's probably not going to happen, but if Rocket Lab, if SpaceX continues to fall, it might pull Rocket Lab down into the 40s. In which case I'm like, I just need to buy it then. Voyager is at 26. Maybe Voyager is at 16. That would be a stupid price, actually. I don't think it... Oh, that one, I don't know if it can fall that far. But, yeah.
Yes. Let me also ask this. Are we buyers of iron here?
In isolation, if that was all that had fallen, I'd be buying a lot of iron. It's not though. So I think Nebius is, and also CoreWeave are higher quality names, and I would prefer to do those. But it's attractive. I get the same question about Oracle. Oracle's pretty attractive here too, but I like CoreWeave better. So I'm going to invest there.
Yeah. Did you see Apple is at all-time highs, by the way? It's higher than Nvidia right now. Like it's bigger as a company market cap.
Yeah. Well, they didn't really punt on the AI trade. They just really executed so horribly that they eventually they're like, okay, we're done. And that's great in times like this where there's weight on stocks associated with the AI name instead of benefit. But yeah, the valuation of Apple is just silly. Usually you'll see some of that. And I'm actually kind of curious why people are piling into that, because you'll usually see this type of volume and also price momentum before a major correction or before a bear market, because it's a natural flight to safety. But man, maybe they really like the new CEO. I don't know.
Can I pull us out of Q&A for just a second, because I really want to talk to you about this. Netflix. Can we actually, what do we think here? Chris posted this saying Netflix is entering an air pocket of compression, top line growth slowing down, means forward multiples will compress, presenting an opportunity to buy the company, or for the company to buy back shares to essentially boost EPS. At some point, the forwards curve will become too oversold and Netflix will complete the growth to value transition where there might be real opportunities. Netflix, of course, reached new lows. I think it's down, 50% year to date or something ridiculous like this, off the back of their earnings. And of course, their earnings had some reduced guidance, or guidance was not as strong. It's getting into that value territory, Roy. Like, what do we think of Netflix right now? I mean, we've talked about it in the past, but it's never been as cheap as it is right now. But as we know, cheap can always be cheaper. Netflix is currently sitting at a $290 billion valuation. Thoughts?
Yeah, let me pull it up and take a look here. I think, well, one thing on the revenue side, I do think that ad revenue is going to accelerate. They do have the ad model, and they're not dummies there. They will be able to get that to work. In the revenue growth that we're talking about is not so slow. Here, let me throw this up. It's not so slow that you would be like, oh man, it's a really slow, mature growth story. I do think, of course, the acquisition that they failed to get was in part to help not only strengthen the ecosystem, but also buy revenue. And they weren't able to do that. So you do see, this deceleration here. There are these moments where Netflix does that and people freak out and then it rebounds. I wouldn't be surprised if Netflix going forward, and it's probably modeled currently. Let's see if we can go a little bit further out. Yeah. That feels about right. Like it can always surprise a little bit. This isn't bad though. And they certainly can because they're trading at a pretty cheap valuation. Let's pull that up too. Metrics, and we'll do ratios here. And let's do price to earnings. Let's do price to free cash flow as well. And we're gonna go pretty far back. Although the earnings one, that'll skew it. Let me hide the actually free cash flow one real quick. Okay. Yeah, they're not quite at the levels that they were during the bear market. So this isn't like a historically cheap type of thing where it's trading at 15s at one point. This is price earnings, by the way, not forward price earnings. Let me do the forward as well here real quick.
And by the way, thank you for the $2, Travis Jackson Jr. Bury Long, DraftKings, FanDuel, Flutter, or thoughts? We'll answer that right after this.
Yeah, so let me hide this one right here right quick. And yeah, forward, we're actually getting pretty close here, Tevis. 16.4 is the low that I see here. We're at 19.9. So yeah, it'll be interesting. Like I like bets like this, but also like there's so many buys in the market right now that I just if I had money and the market hadn't fallen like it was, this might be a good swing for me. I like these kind of opportunities, but it can take time. And even you can look at Netflix's share price. It'll jump from time to time, but it's just been like constant downward pressure for the most part. We had, of course, that moment here in April that it had done quite well and went up about 40% from the bottom. And it's still falling. So it's been really since early 2025. So I wouldn't, I might be tempted to swing it at some point in the future if it continues to go this direction. I don't think that they're dead in the water, but I would also want to see what their strategy looks like beyond just a failed acquisition.
Yeah. I mean, look, similar to what we were saying earlier, it's getting interesting. And I mean, we don't have a gun to our head to swing at Netflix, but at some point it might be too good to pass up. Yeah, go ahead, Roy.
Do you see June's comment? I'm going to pull up the...
Yeah, let's go back to Q&A. Let me actually address this first because it's the donation, then we'll get to June. What do we think about DraftKings or FanDuel? I think, like, obviously you're going to have a pretty high volume due to the World Cup and a lot of activity there. So short term could be bullish. We could have a upside surprise. Long term and medium term, I think prediction markets are just going to eat their lunch.
Yeah, and they are, I believe in prediction markets, but why not? If you're really bullish on the prediction market part, the largest and I think the easiest bet is just Robinhood. They built the Rothera platform.
Yep.
I didn't even pull that up when we were talking about Robinhood earlier and all the different things. Is the Rothera launch is looking really, really good. So a lot of that is due to the World Cup, but they are going to be the number 3 platform. They're the largest publicly traded one that you can do. And it's such a good platform from my perspective, as far as just how hardened it is, how transparent it is, the leadership, the strategy, the pricing, that there will be in the future, probably the DraftKings and the FanDuels that say, hey, why don't we run our predictions markets on the Rothera platform, which Robinhood owns a good chunk of.
Yeah, and look, I think fundamentally, if we just zoom out from a just logic perspective, prediction markets are a superior product offering. And the reason is because the house is not determining what the odds are. You're playing against somebody else, and the odds are dictated by the market, not by a centralized party, right? And there is more opportunities for arbitrage in prediction markets because, like, for example, you have prediction markets around what SoFi is going to do for earnings. If I'm a well-informed content creator on SoFi and I know more than the average person, then I can have some arbitrage there. Versus if there was an option to invest in SoFi earnings on DraftKings, they would have an entire team of data analysts running the odds, and they would have a house edge in terms of, you know, a, they would have house edge on that product offering, making it less likely for me as a user to make money. And so I think prediction markets naturally are more democratized, and there's more of an arbitrage opportunity there, therefore making them a better product offering in general. And I think overall they're going to win. Now, can DraftKings completely crush it in the next earnings? Absolutely, they can, because I don't know that, you know, everything is priced in with regards to this volume from the World Cup for DraftKings.
Yeah.
Gangster Travis. Prediction markets boring compared to fantasy DFS. I don't know what fantasy DFS is.
I'm not sure what that is. DFS. Still not sure what that is.
Yeah, I mean, I'm sure Gangster Travis will tell us. Do you want me to throw this up, what you have here on screen?
No.
Okay.
I'm not sure why I shared that. Sorry.
Daily fantasy.
Okay. Yeah.
Yeah, I don't have an opinion on this. I don't know. I've never done the daily fantasy. So thank you for the $2, but I have no opinion, honestly.
Yeah. I think Dre's comment is pretty good at 753. He says regulation is coming for predict markets, which it needs to, and it should, and DraftKings will benefit. It depends how that plays out. At least right now, most of the legal battles that are happening in states, for the most part, have actually gone in favor of the predictions market platforms. Maybe that changes after midterms. I don't know. But yeah, I'm not sure about that. But if that's the way it plays out and prediction markets become a lot more restricted, can't offer sports or something like that, yeah, DraftKings would for sure benefit.
Yeah. All right, back to June's comment now. Let's see. What was this about? U.S. Air Force more than triples launch contract ceiling. The Air Force is raising its ceiling for national security space launch phase 3 lane 1 contracts from 17 billion to 17 billion from 5.6 billion, which would represent an $11.4 billion increase. This is Wall Street Engine reporting a few hours ago. Eligible providers include Rocket Lab, SpaceX, Blue Origin, ULA, Stoke Space, and a bunch of others. No funds are being obligated yet. Awards will be issued at the task order level. Roy, what are your thoughts?
That's awesome for space names. Maybe that marks a bottom in this space, pun intended.
Yeah, military contracts are no joke, as Dre says.
Yeah, that's the nice thing with a lot of these names is they have the military contracts, which are like you said, no joke. Some governmental contracts and also commercial as well. And so it's not a like, oh no, it's all government and what happens if they cut? No, and those probably won't be cut anyway. But yeah, commercial is also ramping, and you can look out over the next decade and just see like this is gonna be a lot bigger. It's obvious.
Yeah.
Still, there's a premium there.
Yeah, and maybe more realistic is like the fund is gonna be split out across multiple providers as opposed to the lion's share going to a single provider. I think that's just good management. They're just hedging their bets. So we could definitely see more than one of these contracts being awarded to different players.
See also Golden Dome.
Yeah. Yes. Can Ondas get some of this money? I mean, I don't know if Ondas is in the launch business, but I just don't know enough about it. We still have to do that show with Ondas. I got to respond to those guys.
Yeah. No, I don't think that they are unless there's something I missed with them. So
yeah. Gangster Travis, another $2. Thank you very much. Trump getting ready to tweet in the next 3 minutes. All right. Yeah. Let's see what that's all about. Yeah. Martin says, you got me thinking. I'll have to look into it more. Fly or Rocket Lab. Don't know Voyager at all.
Yeah, Voyager's worth a look. Fly and Rocket Lab, I think, are worth a look too. I don't think any of them are like Fly's leadership is the one thing that I need to really get a better handle on because I've heard some things. I don't know how true it is. Voyager and Rocket Lab, I mean, Sir Peter Beck's amazing, so and they're very transparent. Uh, at times too transparent, but that's a good thing as a shareholder. So yeah, I have no issues with that. So that's one of the reasons why I have Voyager ahead of Fly. There's a couple other reasons, but yeah, all are worth looking at, I would say. ASTS is one that I'd also lump in there. It's not for me, but a lot of people really like that company, and I can see some reasons why. I do see another donation. Kevin, thank you so much for the $5. He says thoughts on Nokia and the 6G build out, especially with all the new phones coming out in 2027. Seems reasonable at these prices. Yeah, with Nokia, you have the 6G build out. You also have some AI. They're partly in the AI play. You know, some of the what's going to happen with AI too is there's going to be more on-prem or on not on-prem on-device inference that'll happen. Those are all good things for Nokia. A lot of people, if you look back 3 or 4 months ago, were super excited by this name. I don't keep up with it actively, so maybe there's something that's changed meaningfully. If so, I've not seen that, and I'm guessing that the only thing that's changed is the share price. So I've
Yeah.
not done enough due diligence. I've read like Amit had a really good piece on his Substack on it 3 or 4 months ago. If you haven't seen that, Kevin, I recommend reading it. There's a lot of good content out there, but I would have to do my own research. I've not done that yet.
Yeah, maybe I can add a little bit on the Nokia piece because I'm actually in it. They're going to be reporting earnings here very shortly. And I think that there's an interesting thesis with Nokia. I haven't decided if this is like a long term for me, but right now I'm treating it more as a swing. Basically, in a nutshell, they're shifting from this like cell tower company into something that's high margin, focused on AI and focused on software infrastructure in general as a provider, right? They're selling to AI data centers. They have an NVIDIA partnership to build out the cellular networks using GPUs. So they're going to have the hardware for when 6G launches. That could be a potential catalyst down the line. But I really think the main catalyst is on the network design side of things, right? It's going to allow the network to sort of track autonomous cars when we get there, factory robots, all of this, and just have a latency that's just better than what we currently have. And then you also have the AI use case, right? The amount of data that needs to move instantly that can be provided from Nokia, essentially having like super fast, fiber optic gear that all of these hyperscalers, Google, Amazon, Nvidia, like they all need to connect to AI supercomputers. Like Nokia can essentially power all of that, and that's a thesis in a nutshell. But it's going to take time to build that out. I mean, there's a reason why Nvidia is so heavily invested into Nokia, and I think that is a really interesting use case. It has legs. I'm just not sure right now, like how I'd have to do more reading beyond that surface level for Nokia as a specific investment. But that's essentially the thesis.
Yeah. Last time they had a huge EPS beat. I remembered. I don't remember why. I'm not a Nokia shareholder. What are your expectations as far as like? I know you have a further out thesis. You're not like expecting it necessarily pop, but on the EPS side or revenue, do you think there will be some surprises?
I think more of the surprises are going to come out of the commentary of what they're going to say on the earnings call, because that really, or if there's any deals that are announced. Because really the case for Nokia is like a lot of investors are looking at it from a multi-quarter or a multi-year perspective, not just today for tomorrow.
We have time for one more question because I want to ask it to you too. Highland Harper's question there at 8:02.
I mean, we're over time, but we can make time.
Yeah. So I'll read his question. And my question, kind of related to this, is why don't you think that they didn't sell shares at a much higher price to be able to fund forward capex? But he said how much Nebius need to raise in cash committed 27-28 buildouts, estimate for quarter two spend 2.7 billion with 9 billion on hand, Q4 raise. And of course, they dipped into the debt market here recently. So
I have no idea. Yeah. I mean, like what they raised right now is a drop in the bucket. If you think about the capex requirements, 27 and 28. I mean, Arcadi even mentioned that like the capex is going to be even higher than 26, right? So they're going to be needing to raise more. But the positive there is they have the subsidiaries. My prediction is always that they're going to be selling their ClickHouse stake next year as a way to fund, um, their capex build out. There's a clip, and I'll make a video about this, but there's a clip where Arcadi's like, "Hey, look, right now we're investing in the tens of billions for build out, and we're trying to figure out creative ways of how we can get to investing in the hundreds of billions for build out." So that should be a hint over the next several years. Like 25 billion in capex looks like a lot right now, but if you fast forward 2 years from now, you're going to get to a place where you're investing much more than that. And by the way, thanks for the $5. And also, yeah, Databricks is their Series M round. I think they just raised more money, and every time Databricks raises money, and I said this, dude, I said Databricks is going to raise more money by the end of the year, and it happened in July. It didn't even happen in the end of the year.
yeah,
So ClickHouse is absolutely going to raise more money by the end of the year, guys. And you can bookmark this. It's going to happen. But the point is that by 27, I think Nebius is going to sell their ClickHouse stake as a way to fund the majority of their capex. Because every time Databricks raises money, ClickHouse gets a higher valuation and it leads ClickHouse to raise money as well. It opens the door for them. And guess what happens after that? Nebius will get a boost, not only in the stock, but Nebius has more optionality in terms of funding their capex. And it's all going to happen in a domino effect, right? We thought Databricks was going to IPO this year. It could still happen, but what we know for sure is ClickHouse is going to raise more, and we know for sure Nebius is at some point going to shed ClickHouse to fund their capex. I think it's going to happen next year.
why do you think? Yeah, Joppy says that's maybe why Nebius did well today, and I agree with you on that. Like that, it is a big thing for Nebius, and man, they did really well getting ClickHouse where they did a long time ago. So, why do you think they didn't sell? When they were around $300 a share, if they didn't do any raises.
I don't know. That's the question that I asked, when this news came out today. Like, I don't know.
That's the only thing that I've seen Nebius do since I've been paying attention to it. Like it's been a year and a half where I'm like, that seems stupid. Like everything else, I'm like, oh, that's smart. That's smart. That's good. Wow, that's impressive. It's like, no big deal on that one. And this is like, I was expecting it. I was thinking it was inevitable. Maybe they were expecting like, hey, if we're near $300, maybe we can go to 400. But
Well,
like, I
yeah,
don't know, man.
their CFO, Dotto, said, "Hey, we're going to be raising money here very shortly within a matter of weeks." And I came out on a video and I said, "Look, like any week now, I'm expecting Nebius to raise more money," because she literally said it on the earnings call. And then what happened was a month and a half passed before they announced this. And I'm like, okay, well, guys, you could have definitely had a higher premium.
Yeah, and like Zomzom said, they tapped the debt market. Now, that's not like huge concern for Nebius at all. Like Corey's doing it as well, and that's their model more so than the dilution is the debt. But and it's really a both and. It's just like what percentage is debt versus dilution. But when your stock is, and you're as bullish as pretty much anybody except for maybe Nate on Nebius, maybe Manuel, but like you're like absolutely insanely bullish on Nebius, and for good reason. But even you were like, hey, it's maybe a little ahead of itself here, and they didn't sell. And if they know they have these massive capex commits, even if it's like, hey, it can go higher, we don't want to make our shareholders unhappy, and I'm just speculating, I have no idea. You got to do the right thing for the business at the end of the day. But I mean, like honestly, like still great leadership, great company. It's just the first thing that I've seen that I recall saying that's not good. Like so.
Yeah, and here we have Gangster Roy coming out with his thoughts, saying Nebius got zucked. Yeah, they didn't expect the meta news to come out and just totally. I mean, like I don't know how long these things take to set up. like if it takes multiple weeks to get this going, or if they can actually be like, oh, stock's at 300, let's do it today, guys. Like, I don't know what logistics are.
Yeah, with the since they already have partners that they've done the now they've done senior convertible notes. Have they done at the market offerings as well? But
They
basically,
haven't.
like
No.
whatever model that they've been using, what like senior convertibles, they have partners that help do all of that for them. It's not a very long process. They do need to make sure that they update everything. But what I've heard, what I've understood, and I could be wrong here, is if it's already set up, you already have a relationship, you can do that in 3 weeks or even less in some cases. It's not a long, arduous, drawn out process when it's already you've established that relationship. So there's probably some reason why they didn't do it. Maybe they'll talk about it on the earnings call. I kind of doubt it, but yeah.
Yeah.
We all got sucked.
I mean, we're good. We all got sucked. We're gonna get more on the earnings when Nebius does report here very shortly, and of course we'll be covering that live. At least we'll try to, and I think we will for sure be covering that live. At least I will. But yeah, more to come on the Nebius side of the house. Lots of earnings coming up next week. I think Tesla's also next week. ServiceNow for sure. Nokia's next week, next Thursday, I believe it is. Let me see earnings here, so we can pull up the calendar.
While you're pulling that up, Highland did note back in November 25, they did a small at the market. Yeah. I vaguely remembered, but I couldn't. Yeah, so thank you for that.
I think they announced the ATM. They didn't like draw from it. I mean, Highland can be honest, but I'm pretty sure.
If that's the case, maybe they did sell some. We'll find out at earnings.
Here we have Alphabet, ServiceNow, IBM, Tesla all on Wednesday. Nokia and Intel on Thursday. We got pretty much nobody on Ally, I guess you could say, and pretty much nobody on Monday. Amex on Friday could be interesting, but yeah, earnings is slowly starting to make its way. Earnings watch party season. Heck yes, Dre. It's gonna be fun. Thank you everybody so much for go ahead, Ray.
Tesla too on Thursday.
On Wednesday, after the bell. Thank you so much, everybody, for watching the show and following along with the channels. This has been your Fiesta Friday. Cheers, happy trading. A little bit of therapy hour after that market. We will be back, not Monday, but tomorrow with our annual stock draft at 6 p.m. The only regret I have is that it's going to be during the France-England game, but it's going to be towards the end of the game. So if you choose to see us instead of seeing the rest of that game, we'll know you're a real one. Thanks all. See you tomorrow.